Okay, welcome. I'm explaining two things in this video. I'm covering both liquidity and OCL, and how to enter an OCL, the criteria you need to enter an OCL. So I'll start with liquidity. It's a simple term. Liquidity means money. Liquidity. So liquidity means money. First, let me write it. Liquidity means money. Exactly. So we have types of liquidity. Types of liquidity. I do not go out of the line. I just want to go straight to the point and not beat around the bush. Types of liquidity. Types of liquidity. We have transactional liquidity. Transactional liquidity. Secondly, we have structural liquidity. And thirdly, we have inducement liquidity. Inducement liquidity. Yeah. So maybe you are an SMC trader before. You've already know about this. Then you will know that there will be a sweep like this. You call this what? A liquidity sweep, right? Understand? Or you have this. And you have this. This, you call this a liquidity sweep also, right? Now let me break it down to you so that you will not confuse yourself in the market. So I'll make everything simple. Just the more simple it is, the better. The more simple your trading is, the better. Let me just start from transactional liquidity. Transactional liquidity happens when the market is trying to change direction. When there is a transaction between the buyers and the sellers, saying that, okay, I'm not selling it. The sellers are not enough in the market again. Buyers are taking over now. Understand? There is that transaction between the selling and the buying. Understand? Which is switching from selling and buying. And now, like I told you in the first video, I was like, we follow trend. So immediately you know that the market has changed trend already. What do? You follow the new trend. You understand? So let me explain what I mean by that. For example, you have this. This is a transactional liquidity. Because why? You have a liquidity sweep here. Can you see? And you have a change of character here. Can you see? Let me give you, another. For it to be clear, let me use by. This is a transactional liquidity, indicating that this last support was swept, also known as liquidity sweep. Understand? And the market broke what? Broke this resistance. Can you see? Indicating that what? The market is shifting structure from selling to buying. This can be on 1 hour time frame. It can be on 4 hours time frame. It doesn't matter. Or 2 hours. You understand? The clearer it is, the better. So you know that here now, the market is changing direction. This is just a simple term of transactional liquidity, changing from selling to buying. Understand? Let me give you much example again. You should see this often in my charts. You have it like this. You have it like this. Then you have this. This is a transactional liquidity. We are selling from here before to here. Now the market swept this last support and did what? And broke this resistance. This is a transactional liquidity, pure transactional liquidity. Understood? Let me show you on chart. Sorry. Let me show you on chart. I can go to 4 hours. I can go to 4 hours. Something like this. If you cannot see it very well, I always tell you switch to what? Switch to line. Do you see it here? A liquidity sweep. Can you see? And a change. Can you see it now? This is also what? A liquidity sweep. And this got broken. I'm very sure this place will be tested again on a normal chart. I'm very sure this place will be tested. Let me check. It has not even been tested. That's a strong resistance. Can you guys a strong support? Can you see now? It has not been tested self. Can you see? So if you have this kind of trade now, a lot of people will be asking, how do you see it? And it's very simple with just line. Do you see? This is a very strong glue. Very strong one. Very, very strong glue. You understand? So, and after that, you can see that the market has been moving since then. This is like almost 1 month and a half trade. Can you see? Can you see? All because of this resistance that was broken. If not, it's supposed to continue selling, but this resistance was broken, and the market has been going upwards since then. Understood? So that is typical of just transactional liquidity. Or let me just go to more lower time frame to fish out new ones and then show you transactional liquidity. And then I'm looking for clean ones for you so that you will not get confused. Let me go to 15 minutes. There's too much noise on sorry, checking up on something. This is about structure. I cannot show you this now. You can see right here. I even took the trade right here. You can see if I should switch to chart. Do you know that there was a sweep here? 1. But where is the last sweep? This was the last sweep. You can see. That was the last sweep. This is the last sweep, which is the QMR. And we have what? We have a change of character right here. You can see. And at the same time, we have what? We have a break of structure. You can see. The market broke multiple resistance and multiple support. You can see. There's also one here. There's also one here. But this was the first one. And this is the break of structure. You can see now. So this is a proper transactional liquidity. Is it there? You can see now. It's clear. It's more clear here. this is a proper transactional liquidity, and this is your breakup structure. So most time you just have to watch out for what? For the transactional liquidities. Also here also we have a sweep here. And we have what? We have a change of character here. You can see my line was even there before. I've already seen it. Understand? But we didn't see a liquidity close to it. That is why we cannot take that kind of place. So knowing when the market change character is very important. Knowing when you see a transactional liquidity is very important. Let me go back to where I was. Let me just thank you. So that is all about transactional liquidity. Then we have structural, which is something like this. Let me show you what a structural liquidity is. You can see now, as long as your pullback is touching your RBS, the pullback now become what? A liquidity. What type of liquidity? A structural liquidity. If your pullback is not touching your market structure shift, it's not yet a structural liquidity. This is a structural liquidity. Can you see now? That is what a structural liquidity is. If it's like this, it's still a structural liquidity as long as it gives us this pullback, this 50% pullback. You can see it's still a structural liquidity. You will know that you will enter from the support right here, the next support. But if it's like this, it's touching this market structure shift, you mark it as structural and you take the next support, the QMR. You can see. So that is about structural liquidity. First pullback, you always monitor the first pullback after your market structure shift. If the first pullback is touching it, that's your structural liquidity. If it's not touching it, it's something else. So that is about structural liquidity. Let me show you an example on chart. Look at something. Okay. Where is the BTC USD I was saying, self? Okay, they're still going. Let me bring in. I'm looking for something. Then it's still. I'm looking for clear ones for you. I'm looking for clear ones for you. They want to do so that you can see why we do not trade every time. Now we look for the right ones. Do not just jump into trade. Look for the right ones. Right here on this line, right here, like this. Right here. I'm just using this one as an example for you guys here. Right here. If you should switch to line, you can see that there was a sweep here. There was a break here. The market structure shift. Let's see. You can see. I told you if the market structure shift is touching your this thing, it's a structure. If your first pullback is touching your break, your RBS, it's a structural. But this thing is not touching, so it's not. This is not a structural. You can see, but still it still works here. With this RBS still work up to this point. You can see. The RBS still works, but that is not what I'm trying to show you. I'm trying to show you a structural liquidity, a very fine one, that you can be able to identify very clearly whenever you see it. The market has been on bull run since. I just tired. Hell, let me use this. See, right here, this is what? A liquidity sweep. You can see this is your liquidity sweep like this. This is your low. This is your resistance that got broken. If you go to normal line, with your normal chart, you can see the market came back to test it. So this is a structural liquidity. And we will surely have what? A QMR here, close to it. Can you see it now? Structural liquidity, a QMR. Let me look for easy ones for you. Something like this also, USD You can see, let me change to line. This market leave me commode. I've just joined manually. I've been waiting here for the past, how many weeks now? How many days? You can see, we have, if you go to line, let me change to line. You can see, we have a sweep here, right here. This is our what? Resistance that got broken. You understand? Market already come back, test the resistance with what? With this wick. This line, this right one, this one, sorry. This, the market already tested there, so that place is not valid again. That is a structural liquidity. You can see. Then we have the QMR entry right here, like this. If I change to line, you can see that it's a very sweet QMR entry. So that is how to identify structural liquidity. It might be very hard, but when you keep practicing it and you start mastering your eye, and you start seeing it more often than you even imagine. Let me see if this thing is going to work. Okay. This is a resistance. Can you see that this is a resistance? After market structure shift right here, market structure shift happened here. Can you see? This is the first pullback. That is also a structural. You can see that is what a structural is. As you go to lower time frame, I will see it very clearly on lower time frame. You can see this is what happened. Let me just draw it for you. If you know that you are confused, you can just mark it like this, draw it by yourself like this. You can see change of character, first pullback. That's where my line is. Can you see? Then push. Now, what is this? This is a liquidity sweep. And this is what? This is your strong high, also known as resistance. And you have a structural close to it. These are the structurals. Can you see? Those are your liquidities. As simple as ABC. This thing is not hard. You get the point. Just calm down, analyze and watch and weigh. The first pullback after a market structure shift, and this is the low. This is the low. Can you see it now? After the low got broken, we now have this thing, this pullback like this. This is the first pullback, and that is our liquidity, our structural liquidity. So now, do you understand structural liquidity now? The first pullback after the market structure shift. This is not the GBPJP. Let me go and look. This is the GBPJP. 4 hours. Where were we? Yeah. right here. So that is about structural liquidity. Then now we talk about inducement liquidity. Inducement liquidity, when you have, most of the time it's used for continuation, like this. You can see now. Then you have this. You can see. On a norm, we have, what is this? We have a liquidity sweep here. You see? We have our support here, also known as order block most of the time. Then we have our RBS here. Resistance becomes support, also known as market structure shift or change of character. Then we have a break of structure. Market breaking two highs is always a break of structure. The first high after a sweep is calculated as what? As the market structure shift, and the second high is calculated as what? As a break of structure. So this is the first pullback now after breaking structure. Did the first pullback touch here? No. So we mark it as what? As an inducement. It's not a structural. It's not a structural. If the first pullback is not touching here, it's an inducement, you mark it like this, then you put your entry here. At where? At the closing range of the bullish candle before the bearish impulsive move. The closing range of the, you see one bullish candle here, one bullish candle here before the bearish candle. You put it at the closing range there, like this. Then you enter. Understand? Then the market will do something like this. Hopefully, we are not the market maker. We don't control the market. We just follow our strategy every time, and it works for us. You see something like this. Can you see? Then after something like this, you come and wait here again. That is why you see that we can take 2 to 3 trades in same area, and we'll hit profit as long as we know what we are taking. After taking from here, we'll come back again and make here another inducement liquidity. You know, I said until it touches our what? Our market structure shift, because before it becomes a structural. So it's not touching our market structure shift, so it's still an inducement liquidity. Then you expect what to happen? You expect this to happen. And continue. You can see now it becomes a structural. You start targeting where? Targeting here. Let me show you on normal chart. Let's go to that same US oil. You can see I'm waiting right here on US oil, and the market is creating more liquidity for me. I'm waiting right here for US oil. Why? Let me make it clear for you. Change to line. Can you see? There was a liquidity sweep here on 1 hour. This was your support, also known as order block. This was your first high that got broken, your market structure shift right here. Let me delete all this. This. This was the first high that was broken, the market structure shift. This was the second high that got broken, your break of structure. And this was another high that got broken, also a break of structure. So we have 3 RBS. We have 1, we have 2, we have 3. This. Can you see now? So why am I waiting? I'm waiting for the first RBS. If it doesn't work for me, I come and wait for here again and target high again. I wait from there, then we'll come back again. I'll come back again and wait for here again. I will hit at the same area 3 times. Can you see? So it's as simple as that. And the first pullback is not touching the market structure shift. So however, this is the first pullback. So I have an inducement liquidity. That is why I'm waiting at the closing range of this bullish candle. Can you see this? Not the bearish one, no, the bullish one, the closing range like this. I'm waiting there. Exactly. It's as simple as that. This is inducement liquidity. Then we'll come again, wait here again. Understand? Then mark anyone that happened here as another inducement before we come back again and wait here. It's as simple as ABC like that. That is all about inducement liquidity. The first pullback after a break of structure. After a break of structure, the first pullback is an inducement. This is it. You can see. For example, this now. I think I saw it on 30 minutes. I think this trade was on 30 minutes right here. Yes, exactly. Let me change it to line. It's supposed to correlate. I'm coming. There is something I saw there that make me took that trade. Okay, right here. This is what I saw. You can see there was a break here. This was the low. Most of the time you will not see liquidity sweep on a higher time frame, but it will happen on lower time frame. That was the low. So, and this was my liquidity. Let me change back to normal distance. You can see this was on high. Sorry, this on high. This is a low, my low, and there was a break, an aggressive break. Then I have my first pullback after the break of structure. This will be my first market structure shift, and this is my break of structure. And the first pullback did not touch it. You can see. So I came there to wait for it. I knew there was a reason I came there. So, and then you see, I covered the high. That was how I took this trade. As simple as that. As simple as that. So that is all about liquidity and how to spot it. You understand? I will still teach you guys about candles also, how to understand candles. You get my point? So this is for now. We'll talk about LCL on the second part of the video.